Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. We got a lot of stock market updates today and a bunch of stock picks. Interestingly, we have a big news story today about Russia and the Ukraine relieving some of the selling pressure that we saw in the market over the last couple of days. But is the stock market overreacting to that move to the upside? And how are professional traders going to handle this big move? We actually have a few stocks that are up a lot pre-market after earnings yesterday. Nvidia is reporting this week. There's a bunch of stuff we have to talk about today, so stick around. We have a really big game plan, and more importantly, Square stock, now known as Block Inc., is giving us one of the most exciting, rare trading patterns. It's a combination of price action and volume that you absolutely have to learn. We're actually going to give you an opportunity to download the PDF that walks you through how to do everything. So stick around. We're going to be back in just 1 second. Okay, so thank you so much, everybody, for joining me. Obviously, everything we talk about here is for educational purposes. It's up to you to make that final decision. We're actually going to jump straight into it. We're going to go right into what we call tape reading. So if you know everything that we do, we're looking to buy stocks. We come out here every day and we talk about the best stocks to buy right now. And when we do that, it's a combination of order flow and tape reading. And we have a really exciting unfolding right now in Square, SQ, formerly known as Square Inc., now known as Block Inc., and I want to walk you through it. You can also grab this. This is actually what we're going to talk about right now, smart money footprints, how the smart money buys and sells millions of shares to generate billions of dollars. You can actually grab this link in the description below this video. There's a PDF download. You just got to put in your information there. We're going to hop right over into the charts. We're going to actually start out first with where the market is right now. And you can see here that the SPY, the S&P 500, is rocketing higher. And obviously, it's based on this news right here, which is kind of interesting. Is it an overreaction to the news to the upside? I want to tell you straight up, and this is actually it's actually really important. Hey, Michael Stefanelli, good morning. How's it going, pal? This is really important because what we are going to find out today is whether or not we're in a bull market or a bear market. And I know that sounds pretty powerful, right? It's because it is. There's an old saying on Wall Street that during bull markets, bad news gets ignored. During during bear markets, good news gets ignored. So this is pretty big good news. It's being perceived as good news. So we'll take a look at the futures again. And you can see that we're actually up at this point, 69 points. So that's a pretty big move to the upside. So the professional traders, a lot of the conversations that we're having in our bootcamp community, which you can't see, I actually have that up on the other screen there, is a lot of people are talking about whether or not this is the ultimate opportunity to be a short seller on the open. Because does this news change inflation? No. Does this news change the fact that interest rates are going to get raised this year? It's just a question of how much and how often. No. So this news does not change that. So is this a reason for aggressive short sellers of stocks to get in there today, watch this push and then push higher and then look for opportunities on the short side? So if you are comfortable with short selling stocks, this could be an opportunity to get a great entry today. If you understand buying puts, which you're buying betting that the market's going down, that could be an opportunity this morning. And if you don't like to short sell or buy options, in this case puts, you could actually buy the inverse ETFs, which we've been talking about quite a bit recently for good reason. The market's been going down. However, what we are looking for, and I want to give you the exact price action that I am looking for this morning, and then we're going to work our way over into Square. And again, if you want, you can download this because we're going to talk about this. I know John A. watches this. Has downloaded that and he really, really loves it. And it gives you the exact price action that we're looking at right now. I want to get through the headlines because I want to get right into Square because it had me jumping out of my seat when we started to see it. And there's actually another stock that's doing the same exact thing. And I'll give Delete full credit. So here's what I'm looking for today. So it's 7:35 in the morning, 2 hours before the market opens. I'm telling you exactly what I'm looking for before the market opens today. Okay. We are looking for the opening print, and then we're looking for the opening push off the opening print. Now, it doesn't matter if we're day trading or swing trading stocks. I want to get that clear. I am looking for very specific price action, okay? If this opens higher, like it's expected to, we now know, and again, hopefully you're a regular viewer of this channel where we talk about tape reading and order flow, you need a line in the sand. You need a price that matters to you. Normally, when you buy stocks, that line in the sand, that price is your entry price. Our job is to identify that before the trade so that before we buy stocks, or even if we determine we want to sell stocks at that point, we have that reference point before we do anything. So in this case, we're talking about short selling stocks. So what I'm looking for, and this is, again, this is literally how I script out the day every day. I am looking for the opening print, which again, we can see that we're opening higher. And this is actually a good illustration. So I'm actually going to do it this way here. So let's assume that this is where the market opens today. Okay, we obviously this is the price action, but this is really what I'm looking for, right? Let's assume that the market opens here at that level. What I am looking for is the open and then the push off the open. So it's two steps, it's two phases, open and then the push. That push off the open, when you have the right market conditions, which I actually do believe we have this morning, that push off the open typically gives you the high or the low for the entire day. Think about how powerful that information is as a stock trader, where you are setting up based on patterns that are unfolding over the last 2 days, specifically over the last week, over the last month, and then you get that pattern. This is what I'm looking for: an open, a push, and that moment within the first half hour of the day today. Again, it doesn't matter if you're day trading or swing trading, because you need to learn this pattern. Is we are looking for that to be the moment of truth when we determine, when the market tells us, when the stock market, Mr. Market, whatever name you want to give it, tells us, is this news an exaggeration to the upside, and are we seeing an opportunity to short sell? And what we're looking for is there's two plays. You get the open, the push, and you start to roll over. Now, if the market internals, and I'm specifically looking at the ticks and the VIX, if the two of them do not confirm this big opening to the upside, so in other words, we push higher and the ticks give us lower highs, and we push higher in the market and the VIX gives us a move to the upside. Remember, the VIX moves in the opposite direction of the market. Then I will be looking for an aggressive short sell. If after the first 30 minutes of trading, we open, push higher, and maintain that bid. So remember, we use the terminology holding the bid. If we remain above that current hour, so in other words, 9:30 to 10:30, and we stay there within that first half hour, first 30 minutes of trading, then the market is interpreting this as positive news, and now we can shift over into being a little bit more aggressive. Now, is that hedging both sides of the trade? Is that saying, well, I'm not sure what's going to happen, but if this happens, I'm looking at that side. If this happens, I'm looking at that side. Yes, that's real trading, folks. That is what real traders do. I have different share size, different position size for if this happens, that's how the market's telling me to trade. If this happens, that's how the market's telling me to trade. That's how you need to script out every single day. But what we're talking about now, we're going to jump into right now, is this. Smart Money Footprints is the roadmap that I use every single day for mapping out order flow. We have accumulation, a markup, so sideways with heavy volume, that leads to a big push to the upside, which is called a markup. Then you get distribution, which is heavy, whippy type price action, also churning with heavy volume. That is usually the smart money exiting a bullish trade. And then when there's no more smart money, that's when we end up seeing the markdown. So everything is explained in that PDF. When you have a chance after this video, go down into the description and download that. Very, very important. But here's what's so exciting right now. If we go over to Square, so we're going to go out on the daily charts and we're going to pop in Square. Let's see. Good morning, Hero. How are you today? So this is what we're looking at. Now, I talk about this all the time. Now, I know John Bates and Michael and a few other people, Simon, have been in the boot camp with me. Absolutely appreciate every minute that you guys have spent with me. One of the biggest things that you need to learn as a trader, if you want to raise your game, is you need to run scans that include price and volume and run them separately. So what I mean by that is you want to first run your scans to determine where are we in order flow. Is it bullish, bearish, or stuck in the middle of nowhere? Now, believe it or not, that stuck in the middle of nowhere is one that's pretty important, because where that price action happens and how that price action happens with volume should make you jump out of your seat when you see something obvious. This is a video you're going to watch more than once. I'm telling you, there's some trading gold in here that once you understand it and see it unfold over time, it's incredibly, incredibly exciting. So we're going to go back over to Square, and you can see over here in Square, big move to the downside, right? Nothing all that exciting. We got this little move sideways. You're like, yeah, I watch these videos every day. Pete says when they're in a box, that's the right price. There's nothing to do. However, let's look at this from the second type of scan that I really want you to run, which is double normal volume. Double normal volume, okay? Let's take a look at this now. Look at how dramatically different this picture changes during this box and volume dramatically increasing during this pause. I just cannot say strongly enough, this is one of the most exciting things that I've seen in a while. Now, I brought this up to somebody yesterday in our Top Trading Pros Facebook group, which, by the way, if you're not in that group, you absolutely want to get in there. We have some great conversations during the day, a little bit more interactive than obviously we could do on the live stream. You'll get that link in the description as well. Somebody said that that's great, but it's still going down. You shouldn't get in front of a train that's going down. You're right. You're absolutely right. You shouldn't. You should not be trying to pick a bottom. However, there are certain circumstances that are different. Certain circumstances that make you sit up in your seat and you go, whoa, I have to pay attention to that. This is one of those circumstances in SQ, which is now known as block. This increase in volume during this pause is about as perfect of a chart. You want to print this out, you want to snapshot it, you want to put it into your workbook. It's about as perfect of a example of accumulation as possible. Now, I want to walk you through what's happening so you can visualize and understand what's going on. When we see downtrends, we see bearish order flow, right? Somebody with deep pockets is selling this thing. They're selling it. You see a push down and a pause, a push down and a pause, a push down and a pause. Somebody with a lot of supply is dumping this thing on the market. Now, somebody else at some point, maybe Cathie Wood. You read a lot of stories about Cathie Wood starting to load up on the stock. It could be Cathie Wood. It could be anybody with deep pockets. At some point, they step in, all of their research. We think Square is valuable at this level based on the cash flows. We think that this is a good deal, and we think it's going higher over the next whatever period of time. So now retail is seeing this thing going down, and they're either selling positions they own or aggressive short sellers, people who bet on them on stocks going down, they are shorting the stock. So they're dumping supply on the market. They are selling. All of a sudden, that big money comes in and starts to buy quietly. Now it's going down. Everybody's watching it go down. And the sellers, they can be as quiet as possible. They can just watch it and start bidding. Look right there. Let me zoom this out a little bit for you. Right there, and right there is when things changed. It pushed down, volume came in, volume, heavy volume, and it stopped going down. This is so valuable, I can't explain this to you. I really hope you watch this video more than once or twice, because this is stuff where you're not just, hey, I know bull flags. This is not your daddy's bull flag. This is leveling up and understanding tape reading. So what's going on behind the scenes, and again, if you don't know, I had 25 former New York Stock Exchange specialists in my office in New York City. I had 300 people trading my capital. This is one of the most important patterns you could learn. As it's going down, the smart money is just sitting there saying, I'm just going to keep buying it at these levels. You ever heard on CNBC where they say, I like a stock at this level? This is what we're talking about. But now in this case, it's super interesting because we're going to forecast or walk you through what should happen next and then how we plan to interact with that price action. So let's use let's use Sean here as an example. Let's say Sean owns a hedge fund, and Sean and Kathy Wood, they're having coffee, and they're like, yeah, my God, Square at this level, we love it down here. It's going down. So now they're selling, and they're just sitting on the bid. They're advertising to buy quietly. It's going down, they're buying. It's going down, they're buying. It's selling, but now it stops going down because they're buying. So they need to get 1 million, 5 million, 10 million shares, whatever it happens to be. Inexperienced short sellers are still seeing the thing going down. They're not noticing now it's going sideways. They're not noticing the volume is expanding. So that's what we're talking about over here. And you can see this. Look at the volume starting to increase. Big move to the downside and a reversal. Move to the downside and a reversal. Move to the downside and we go sideways, and volume expanding dramatically. So now let's go back to Sean's hedge fund. Sean's got the hedge fund, and he's sitting in there. He's saying, wow, I still have to buy another 3 million shares of this stock. It's not going down anymore. I'm sitting on the bid. The selling has dried up because we stopped it from going down. But Sean needs more shares. Sean's hedge fund needs more shares. Sean thinks this is the best stock to buy now in the universe. Whatever reasons, right? He now needs to pay higher prices because he needs to fill his orders. That's where we got the term order flow. When large institutions are in the market and they're sending orders to the market, that's the order flow that we're tracking. We're tracking Sean's order flow. So all of this is going on. If you push down and go sideways on light volume, Sean's not stepping up. Nobody's stopping yet. Nobody with size is saying, I like it here. I'm going to start accumulating the stock. So what we're talking about is a move down and then a move sideways. So down for a prolonged period of time, sideways. But the sideways needs to be recognized by running that double normal volume scan. So every day we talk about stocks to buy in our trading journal and then stocks to buy in our tracking journal. The tracking journal are ideas when we do our scans every day that say, wow, that looks pretty interesting. I'm going to put that in my tracking journal. And if X, Y, and Z unfolds, then I'm going to set an alert to do something. And we started doing this in Square about a week and a half ago, 2 weeks ago, where it got started to get interesting. You push down and then stop and then heavy volume and go sideways. Now Sean has to step up and start paying higher prices because it's more important to Sean that he gets the shares on because of where he thinks the price is going. That's how accumulation works, and that's how the real stock market works. If you put together the pieces of price action and volume, you now have two of the main pillars of what we teach in our boot camp, which is order flow, order flow is obvious, order flow is obvious, order flow is obvious, order flow is obvious. Then in between the buying or selling pressure, we read the tape to determine, is it a heavy volume pause or a light volume pause? Light volume pause means nothing's changed and you can expect continuation in that direction. What we're seeing now in SQ is incredibly exciting. It's rare when it's this obvious because it's going on now for a few weeks. Somebody with deep pockets is stepping up, stop this thing from going down, and now it's stuck in this. It's a $20 window. I want to be clear. This window is $20, but this is pretty interesting. It made me, right here, actually, is what made me jump out of my seat this one day. So when we run our daily scans, and I strongly recommend you do this as well. And again, I'm showing you the elite version of FinViz. It doesn't matter. You can do the same exact thing on the normal version, which you don't have to pay for. You just got to, I think, sign up. So we go into Screener, and you'll notice that one of the top scans that I run is double normal volume. And it brought up 8 stocks yesterday that had double normal volume. So now we don't just start to buy them. We go now into these stocks on an individual basis, and we start to compare the volume and how that price action is. Look at that. Look at all of that. It's not going sideways, but that's interesting. So actually SE, with all of this price action right now and heavier volume, you can actually see that SE is up 4.5% now. So it's not as obvious as it is in Square, but you get the idea. So we have another one that we're looking at now is MTTR. Very, very similar. A big push to the downside. We are now going sideways and increased volume heading into the earnings report. So I'm going to actually drop this into the chat for everybody. Once you click on that, you can actually You can click on that in FinViz and it'll give you the scan for 2 times normal volume. So that's the first part of what we want to talk about. Now, the next part is if we're looking to buy SQ stock, I keep calling it Square, it's SQ stock and Block Inc. When is the right time to start building that position? Well, it depends on how aggressive you are. There's 2 different types of ideas. Now, I want to address the person, Howard, who's actually in our Top Trading Pro community inside of Facebook. That community is free if you want to sign up. You can just click the link below and join us in there. I'd love to see you in there. Howard said, don't get in front of a train. The thing is going down. You don't want to jump in front of it. And I agree. I do not suggest under normal market conditions, unless we see something significantly different, under normal market conditions, I'd be like, let's wait. Let's wait for a push and a pause. Let's wait for a little bit of proof. Let's wait for the market to tell us that it's okay to jump in the water. In this case, we have a very clear line between 100 and 120. And I'll just bring that chart up again, just so you can actually see what we're talking about here. Right here. So this is the box. This is the box that we're in. You can see it's the push to the downside, basically 100 and 120. And it's actually up 4%, $4 again. So yesterday it was up 3. Today it's up 4. Pre-market, it's up 4. So what kind of trader are you? Are you aggressive alley or conservative candy? Which type of trader are you right now? There's 2 types of trades, and position sizing is a monster part of this. If you believe we've spotted accumulation and you know your risk point, which in this case is $100, you need to know that between where your current entry and the fact that we're still going down to sideways, it's a little bit aggressive in the fact that we don't have feedback yet. We don't have proof from the market, proof in the form of a push up. Sean's hedge fund has not started to pay higher prices. They're not urgent yet to pay higher prices because they're still kind of stuck in this box. But once this becomes a little more obvious and you start to read the headlines, Square has some miraculous headline out there that might come out sometime in the future, right? That's when it starts to become a little more popular. A lot more people start to get in because of the headline, or maybe some people see the price action popping up a little bit. Maybe it gets above the 120. So you have 2 different conviction levels, for lack of a better way of putting it. If you're an aggressive trader and you have discipline and you acknowledge all of the stuff we just talked about, you could put one piece of your trade on knowing it's not your full piece, knowing it's a little bit more aggressive, knowing that accumulation is holding up in that window, and you're looking for it to hold at a minimum at that $100 level. So your stop has to be just below the 100. Now, the amount that you are risking has to be adjusted for the position size. So the share size has to be appropriate for whatever dollar amount you're risking. If it breaks down, you hit the road and we look for the next entry. Remember, this is not chart reading. What my passion is to help you understand the difference between chart reading and trading. We're talking about elevating yourself right now and trading. The difference between a chart reader and a trader is a trader says, pretty good idea. If it follows through, good. If it doesn't follow through, I still built a great argument. Big deal. Part of running my business, a trading loss is a business expense. I accept the risk. I accept the responsibility because I like the payoff. That's real trading. Ask yourself, go look in the mirror right now and say, do you do that? Or do you say, I'm the only person that gets stopped out by a penny. The algos are out to get me. The specialists are out to get me. Get that garbage out of your head. Real traders take responsibility. You accept the risk on the trade. If it works out, you have a plan where you're going to build into that position. So conservative candy, you wait for it to break out, get above 120, you get a little bit more feedback. Sean's hedge fund is now starting to buying. It becomes a little more obvious, and you have a definitive stop loss. You want to be aggressive, Andy, and get involved a little bit sooner, have a smaller piece of your share size, acknowledging it's a little bit more aggressive trade because of the downtrend and sideways, but being excited about it because somebody's stepping up with volume. You put on a small piece of your trade. You have your stop below the $100 level, not exactly there, but a little bit below it. If it breaks down, you hit the road, you're disciplined, you get out, and you say it was a good idea. I built an argument for why I like that idea, just didn't follow through. Pretty exciting to see stuff like that because when they follow through, they're amazing. If it does not go down, does break out, and has that follow through, now your second entry is going to join the first entry of the conservative trader. I'm telling you right now, if you're not a subscriber of our channel and this kind of stuff excites you, if this kind of stuff is valuable to you, all I'm asking you for is smash that like button, hit subscribe, because these are the kind of insights that you're going to get in the real world. We're not talking about the fantasy of buy this stock now, it's going to wherever. That's not what we're talking about. What we are talking about here, and what I want to teach you every day, and again, if you want to do this in a lot more detailed conversations, you have to be in the boot camp with me, because I do this all day, every day, okay? These are the things that will make you feel you have so much control over the outcome, and the stock market will eventually make you money when you put these pieces together. You understand trading losses are a part of the business. It doesn't mean you're wrong. It doesn't mean your strategy doesn't work. It means that one trade didn't follow through, and then you simply look for the next great idea to make money on the next trade. That's what it means to be a trader. If you right now are confused, if you're overwhelmed, if your confidence is shot, these are the kind of things where the mental bank account, probably the most important asset that you possibly can make sure you take care of every day. It's that important. But what we're talking about now is we're kind of going into the playbook. We're going a little bit deeper into my playbook to get into the ideas that are just, I saw it on a scanner last night and I need to buy it, or I saw a tweet from Elon Musk, or I saw something on Reddit. That's not trading, man. That is the lazy way to the poorhouse. You need to elevate what you're thinking. You need to ask, how many different reasons can I put into that argument for accepting taking risk in exchange for the profit that you believe is available based on that whole argument? A little bit more of an aggressive trade, but I got to tell you, it's a pretty exciting one to watch unfold. So think about this now. Need to take the whole conversation into the context. We built out all of this scenario. We built out two different scenarios of being aggressive versus not being aggressive. And we mapped out what we were looking for to happen in the market today: the open, the push off the open, and then the price action after the open. This is what I want to inspire you to start doing. Trading is not complicated. As a matter of fact, it's pretty simple. However, if you're confused, if you're overwhelmed, it's simply because you are not sure about what you're looking for. That's the truth. Here's the thing. If you know what you're looking for, you're not lost anymore. And I can't say that any other way. So what I want to ask you to do, again, if you missed the beginning of the call, this PDF download, you can get the link to download this in the description. Everything we're talking about right now, the double normal volume scan on Finviz, which again, we'll walk through that, right? The double normal volume scan, you start to look for different types of price action and when it happens. And actually, that's a pretty interesting one there as well. You see that volume spike there in SPLK? I'm going to walk you through that one. So you know how we discuss, and let me actually bring this in here and here. So this is actually a different type of volume to notice. So we actually talk about two of the biggest ones that we see on individual candlesticks. One of them is known as exhaustion, which is a big move to the upside or downside, large green or red candles, and a big spike in volume after a significant move. It's a mouthful, but it's only one sentence. That typically ends a move. That's typically Sean's hedge fund being done with the trade, and they negotiated. I'd have 500,000 shares, and they call somebody up and say, take this 500,000, I'm done. That's that huge print you see on the candlestick, and that's the end of that move. So you move up your trailing stop. This, I keep going to the wrong side, this in SPLK is different. It's starting a move. You have a bullish move to the upside, breaking out of a consolidation, and one day of big volume. We call that fuel. And if you think about why we call it fuel, if I'm looking for the best stocks to buy now, that fuel is breaking out of a trading range. So this is the first sign of a breakout on increased volume. So let me actually expand that so you can see the volume, what I'm talking about right here. But we can't ignore the fact that it's been in a trading range. It's not as obvious as what we're looking at in Square right now. So this fuel candlestick after this bullish gap, what am I looking for now? So I don't normally trade this stock, but it meets price action because it came up in the scans, right? So what I'm looking for now is we have this trading range since the beginning of December after a big move to the downside after earnings. Now we're breaking out of this 3-month trading range, December, January, and February. So 2.5-month trading range. I need to see feedback. Okay, SPLK, great. I see fuel. It came up in my scans, right? Tomorrow, meaning today, I want to see another well-bid day. I want the market to prove to me. I want somebody who caused that bullish gap, big volume, and closed near the highs. I want to say, are you coming back today? That's what I want to see. So I want to get a little bit more proof. If SPLK, and again, this is all the stuff that goes in the trading journal. My wife's Valentine's Day card. This is all the stuff that goes in the trading journal. If SPLK follows up yesterday's fuel candlestick with another well-bid candlestick, which is higher highs, higher lows, and closes near the high and has more than normal volume, then I would put it into my game plan, and that validates the breakout out of that trading range. And we'd be looking to start new order flow. So again, what are we looking for at that point? Then we're looking for the markup. That's why we call it smart money footprints. There's no need to guess. Once you understand order flow and tape reading, it's staring you in the face. But then you still need to understand what happens between entry and exit. Everybody on this call right now could get in and get in at the same exact price, and we probably have 500 different exits. It's understanding between entry and exit. That's where the money's made. What we're talking about right now is just spotting the ideas. Then we have to shift over into the next deeper level of what we're talking about, which is actually getting paid. And that's the skill that you need some different time periods to watch. Great market, tough market, choppy market. Those are the kind of things. Bullish market, bearish market. We need time together in real time to discuss how to trade those kind of markets. We actually had that big conversation last night on our coaching call last night, where a huge part of the conversation was, how do I get appropriate profit targets for the current choppy market conditions? And we had a long talk last night about position sizing. Should it be 3-to-1 risk reward as your initial target, or 2-to-1 based on how the market's trading right now? If you don't like to be shorting, should you step back and just wait for better bullish opportunities? If you're involved in some of the better opportunities that we've had recently, which has been the energy stocks or some of these basic material stocks, do you trade those stocks a little bit more aggressively in spite of the fact that the market's bearish to neutral at best? Long conversations. And these are the kind of fireside chats that separate you from trading doesn't work to I know exactly what I'm doing. And when there's money to be made, I'm going to get it. And if I put on a good trade that doesn't work out, I'm okay with that, because that's a business expense. I'm going to finish up with that and I'm going to give you some more ideas for today, because there's a few on both sides of the market. Once you understand that building arguments for ideas, building great ideas to justify accepting risk. And I'm telling you right now, if you're struggling and if your P&L is going back and forth like this, you're probably not doing a good enough job of saying, here's reason 1, reason 2, reason 3, and reason 4 of why I want to buy the stock today and why I think it's going to hit my target and justify the risk. You're probably not building good enough arguments. And what's kind of interesting too is you're probably, even if you know that, you're probably building crappy arguments and still taking the trade anyway. There's that moment of indecision where you have the mouse and you're like, don't do it, don't do it, don't, and you buy it anyway. You have to stop yourself in those moments, stay away from those trades, learn how to stack the order flow, learn how to read the tape, learn how to get it near the optimal entry. Some of those will work out, some of them won't. Remember, what happens between entry and exit is where the profit is made and where you minimize your risk. That simple process, order flow and tape reading, that's most of understanding how to be successful as a trader. When you're looking for the best stocks to buy, you need to pick those stocks based on what we're talking about. Then you need to understand what kind of risk and position size should I take based on everything I just unfolded. That is what gives you conviction to wake up every day and say, I expect to make money in the stock market today because I know what I'm looking for. That's a big difference from all the stock market geniuses who thought they were amazing from the pandemic bottom up until about 2 months ago, and you thought it was, I'm a genius. The market changed, the tape changed. We're not going straight up anymore. Now is where you earn your stripes. Now is where you put your overalls on. You say, you know what? I really want to learn how to make the stock market make me money because there's opportunity. The biggest thing we have going on right now, whether it's bullish or bearish, we have volatility, and volatility is amazing right now. And I'm going to show you a couple of ideas right now. There's a couple that are bouncing pre-market. ANET is actually up right now, trading sideways, but it's up 9.5%. You know that we talk about the Bitcoin mining stocks quite a bit right now. We are looking at this break of the downtrend, and we broke out of this box. 2 days to the downside, which is really a push and a pause. And now Mara is actually up 7%. 7%. Let me see. Lewis has a couple of questions. When you're talking about tape reading, aren't talking about time. No, I'm absolutely not talking about time and sales. That's actually a really good question. I do not teach sticking and watching every 100 share print in time and sales. Can it be done? Yes. It will take you a long time to do that. What I'm talking about, when I'm talking about tape reading, I am talking about right now. How close are we to the optimal entry, and what does order flow look like? So first it starts with order flow. Then we're determining where are we right now from a price action, a volume, and a momentum perspective. All of those things go into building ideas for trades. I want to walk you through a couple of more ideas that I have on today's game plan as far as some bullish ideas. If hopefully you've been watching, we've been talking about Philip Morris now for about a week and a half, maybe even about a month. We started talking about it over here at the end of January. We got nice follow through here. We also have Asana, which is an interesting one. We were talking about this yesterday. The volume came in, it stopped going down. That's actually, you know what? This is a pretty good example of that. We were going down, volume came in, we went sideways, and all of a sudden they started to pay higher prices. Asana is interesting to us right now. NUE has been interesting to us. Remember, if you've been watching our channel and you know that we've been talking about NUE, NUE is having a hard time getting over 122 despite being up from 89 to 122 over the last couple of weeks. So I'm still watching NUE, but I'm looking for it to get over 122. A couple of other ideas on the long side that we're looking at today. Disney actually coming off of the bullish gap on earnings, a pause into another move to the upside. So actually Disney's actually up 2% at this point. So that's going to be on my watch list today as well. And Airbnb, we're starting to see that it finally punched back up to this breakout level. And now we're looking to see, can it get back above 170? If it does get back above 170, then we're looking up for a run around this 208 level, somewhere up in that level. So there's a lot to go over today. The futures, we gave you what we're looking for in the futures today. We gave you what we're looking for in the first hour of the day. We just mapped out the first hour before it even happens, 2 hours before the market opened. We talked about accumulation, talked about downloading that PDF. There's a lot going on today, but I can't stress this enough, and I'll give it to you like super quick because I want you to have an idea. So when you're in our Discord community and you are a part of all the ideas that we're talking about here every day, this is the list of stocks. We have a ton of stocks on the long side and on the short side of the market today. There is opportunity right now, but you need to choose the right opportunity that matches your resources, that matches your skills, that matches your trading account, that matches your risk tolerance. We had somebody reach out to our team yesterday, has a $5,000 trading account and wants to make 100% per month with no experience. That's absolutely ridiculous to think that you're going to do that without experience. If you have no experience, you should be trying to turn 5,000 into 6,000. Make that your first goal. Look, I got big goals, big dreams just as much as anybody else, but you have to understand, you have to be brutally honest with yourself about where you're starting, because where you start dictates a very certain kind of a roadmap to get you to the next step. And I'm pretty darn good at that as well, because whether you have no experience or you have 20 years of experience, there's a higher level for all of us to get to. So be honest about where you're starting. Take all these principles that I'm teaching you. You want to stay on YouTube? That's great. You want to join us in the community? I'd love to see you on that side as well. All right. I have to take off, everybody. Have an awesome day. Watch this video more than once. Smash that like button, hit subscribe. I'd really appreciate it because it lets me know that you're enjoying this content. Thank you so much, everybody. Take care.